You draw a resistance line. Price moves sideways for a while, and then suddenly, it breaks above the level. A green candle appears. Price pushes through the line, and inside your head, you hear that little voice. If I don't enter now, I'm going to miss the move. So you buy, and for a few seconds, it feels good. It feels like you caught the breakout. It feels like the move is finally starting. It feels like this is the one. But then the next candle shows up. Price rejects. It falls right back below the level. The resistance you thought was broken is now holding price down again. And now you're just staring at the chart thinking, wait, wasn't this supposed to be a breakout? No, that was the trap. And in this video, I want to talk about one of the most common traps beginner traders fall into: fake breakouts. Not because every breakout is bad. Breakouts can be great setups, but only if you understand one thing. A breakout is not just price crossing a line. A better breakout is when price breaks the level, holds the level, and shows that buyers or sellers are still in control after the break. In simple words, don't trade just because price breaks the line. Pay attention to what price does after the break.
So first, what is a fake breakout?
A fake breakout happens when price breaks above a resistance level or below a support level and makes traders believe a new move is starting. But then price fails to continue. It turns around. It falls back into the old range. And traders who entered too early get trapped. If price breaks above resistance and then falls back down, buyers get trapped. If price breaks below support and then pushes back up, sellers get trapped. The annoying part is this. At the beginning, a fake breakout can look almost exactly like a real breakout. It breaks the line. It looks strong. It creates excitement. It makes you feel like the market is about to run without you. And that is why it works so well. A fake breakout doesn't trap you with something that looks ugly. It traps you with something that looks beautiful. Most beginners don't get trapped because they can't draw support and resistance. They get trapped because they are too quick after price breaks the level. They see price break resistance, and the only question in their mind is, did price break the level? If the answer is yes, they enter. But that question is not enough. A better question is, price broke the level, but can it actually stay above it? Because a good breakout is not just about the moment price moves through the level, it's about the reaction after that. Can price hold above resistance? Is there follow-through? Does price come back to retest the level? And if it retests, does that old resistance turn into new support? That is where the real information is. The first candle gets your attention. The next few candles tell you if the breakout is actually strong. Before we even talk about the breakout candle, we need to talk about context. Because the same breakout can mean two completely different things depending on where it happens. For example, if the bigger trend is still bearish and price is only moving up as a pullback, a small breakout above resistance can be dangerous. Beginners see that breakout and think, okay, the trend is changing. But sometimes it's not a new uptrend. It's just a pullback inside a bigger downtrend. And when price reaches a better selling area, sellers step back in. That breakout can quickly turn into a trap. So before you trade any breakout, zoom out. Ask yourself, is this breakout going with the bigger trend? Or is it happening inside a pullback against the bigger trend? Because a breakout with the trend and a breakout against the trend are not the same thing. Same candle, same resistance break, completely different context. This is why I don't like treating breakouts as a single candle event. A breakout is not just one candle breaking a line, it is a story. What happened before the break? What happens after the break? And does the market actually accept the new price area? That is what you should care about. Now let's talk about the emotion behind this. FOMO. A lot of traders are scared that if they don't enter right away, price will just run without them. And to be fair, sometimes it does. Sometimes price breaks out and keeps going. No retest, no second chance, no clean entry. That happens. But if you always enter just because you are scared of missing the move, you will get trapped a lot. Because fake breakouts are built to create that exact feeling. Price breaks the level. Beginners see it. They think, this is it. They buy. Their stop loss is usually somewhere below the breakout level. And when price falls back into the range, they get stopped out very quickly. The trap is simple. You think you are buying a breakout, but sometimes you are just buying at the exact moment the market needs new buyers. That sounds harsh, but that's how a lot of fake breakouts work. They create urgency. They make you feel late. They make you feel like you have to click right now. But trading does not always reward the fastest trader. A lot of the time, it rewards the trader who can slow down and read the reaction.
Now here's the part that most beginners miss. A good breakout usually has preparation before it happens. It usually doesn't come out of nowhere. Think about it like this. If a car wants to smash through a wall, it usually needs a run-up. It doesn't just stand right in front of the wall and gently tap it. It backs up. It builds speed. It creates force. And then it hits the wall. Price can work in a similar way. Before a strong breakout, price often builds pressure. For example, let's say we are looking at a resistance level. Price touches resistance once and gets rejected. Then it comes back again and gets rejected. But here's the important part. Each time price gets pushed down, it doesn't fall as deep as before. The lows are getting higher. Sellers are still trying to push price down, but they are not getting the same result anymore. Buyers are stepping in earlier. Price keeps pressing closer and closer to resistance. That is pressure. That is the market taking a run-up. And this is where market structure matters. When price starts making higher lows before a breakout, it shows that buyers are becoming more aggressive. It doesn't guarantee that the breakout will work. Nothing does. But it gives you a much better story than price moving randomly, then suddenly poking above resistance for one candle. Because if there is no buildup, no compression, no higher lows, no pressure near the level, no sign that sellers are getting weaker, then the breakout is more suspicious. It might just be a quick move above the level to pull buyers in, and then price turns around. So the point is simple. A stronger breakout usually has pressure before it breaks. A fake breakout often looks like a sudden poke through the level, but it fails to hold after that. This is why you should not only look at the breakout candle. You need to look before the break and after the break. Before the break, ask, was price building pressure? Were the lows getting higher? Was price getting squeezed toward resistance? Were sellers losing control? Was the breakout going with the bigger trend? Or was it just a pullback inside a bigger trend against you? After the break, ask, can price stay above the level? Is there follow-through? Does price retest the level? And if it retests, does the level hold? A good breakout usually has three parts. Before the break, there is pressure. At the break, there is a clear move through the level. After the break, price holds the new area. If the last part is missing, be careful. Because the market does not only need to break the level, it needs to prove that the level has changed its role. Old resistance should start acting like new support, or old support should start acting like new resistance. If the level does not hold, the breakout is much weaker. And that's the main idea. A fake breakout is not always easy to spot in the moment, because when price breaks the level, it can look real. It can feel real. And that's exactly why so many beginners chase it. So next time, don't rush. Let the market show you more. None of this makes you right 100% of the time, but it can help you avoid a lot of emotional entries. If this helped, take 2 seconds to like the video. And if you want part 2, where I show you the signs of a stronger breakout, check out the next video. Thanks for watching. I'll see you in the next one.